Howdy and welcome. I'm Raymond Dahlman, president of DSA Financial Group, and welcome back to the weekly wrap-up for February 26, 2021. Want to wrap up what's been going on in the week financially and in the economy. So let's go ahead and dive right in and see what's going on in the world of the news. Let's see. Biden doesn't penalize Saudi Crown Prince. There was a airstrike over in Syria over the last couple of days. Those of y'all who know my political leanings know I'm opposed to all forms of violence against other nations. I'm wondering when the impeachment howlings will begin for Biden. So I'm not holding my breath on that one. So anything else of any real importance that the fake news likes to talk about? Let's see, herd immunity. Let's go over to the other fake news. Fox. God, Trump. I wish we would stop talking about this guy. I know he's talking at CPAC sometime this weekend. Big deal. Gillibrand, progressives. So, a lot of fluff. So, let's get into the real news of what's going on in the economy. Personal spending and income has increased from the last couple of months, was up 2.4% over January's numbers. Most notably, I think that's primarily due to unemployment benefits and mostly federal spending. So it's tough to say if this is actual progress, but we'll see. There has been some good news coming out of New York and out of Wall Street. So we'll see if this trend continues. It had been trending down since last summer and was in negative territory for December and January. So, like I said, we'll take a peek and see what that's doing in the next couple of months. Let's see, anything else? U.S. stocks closed mixed for the week. Oil's gaining. It's up 19% this month. I know we talked about that last week. Gold headed for another big month. It has retraced a little bit since its highs last year, but anyone who has been listening to me for a while knows that I'm pretty bullish on gold and silver. Most tangible commodities, I think, are fairly solid choices right now with the uncertainty in the dollar moving forward. All right, well, let's go over and take a look at see how the employment numbers look. Initial jobless claims came in better than forecast, 730,000. The forecast was 838,000. Again, better than the previous week. Let me make this graph a little bit easier to read. So again, trending down a little bit. We'll see what the numbers look like once they're revised. But again, certainly positive news. Unemployment claims going down. Continuing jobless claims, let's see, 4.4 million, just under the forecast, better than last week. And again, this line does continue to trend down in a positive direction. I certainly would like to see more people back to work. It's no secret that I think keeping the economy closed or retarded in the way that we're doing is not helpful, and it's unfortunately doing more harm than good. So, all right, let's move on to some COVID news. I know people like to talk about this. This is an article from Lou Rockwell. Basically, just kind of points out a lot of the what's the word I'm looking for? I hate when I'm on the spot. Inconsistencies. That's the word I'm struggling for at the moment. The inconsistencies in his statements throughout the year. So I'm not going to read through this. I'll link it in the show notes. Basically, the first one that jumps out at me was any PCR test that has 35 or more cycles is essentially useless and misleading. So I think that's probably been, anyone who's been paying attention to the testing and how it's been done over the last year, Kerry Mullins, the gentleman who created the PCR test, he unfortunately passed away before all this started. But there's definitely interviews and articles you can find that he states basically the same thing. That if you run the test cycles up to a certain point, you're going to find so much garbage in there that it's not really a viable test. So, like I said, I'll link this, and if you want to read it, feel free. As far as the COVID numbers, I was keeping track of this up until this week. Basically, I was tracking the age groups, the percentage of COVID deaths to total deaths, and as far as COVID deaths to the total population. But the wonderful CDC changed their chart graph numbers that I was pulling from, and they changed the age groups. So I'm not going back and fixing this. I think it's fairly safe to say that if you're under the age of 60, you're probably, and you're in decent shape, not even, if someone who exercises on a regular basis, you're probably going to be all right. Under the age of 55 through this number, or through February 13th, there were only 32,000 dead out of a total population of 231 million. So very, very small numbers. I know if you know someone who's passed away from COVID, it's probably, it's an anecdotal story, and you're like, oh my God, I can't believe it. He was in the perfect health. Yeah, I've seen plenty of those articles, even up here in Colorado. There was one that was in the local news recently where she went to college over in Kansas, and she got COVID and croaked, but a quick Facebook search, she was obese up until recently, so not exactly the peak of health in my opinion. So anyways, I'm going to put this to bed. I think it's fairly safe to say that if you take care of your health, you probably don't have anything to worry about. So, all right. Let's get into some other stories. There was an article here, talking about the GameStop and the short selling mess that had been going on the last couple weeks. If you happen to be a frequenter of Reddit and you go to Wall Street Bets, it's an entertaining thread to read through. I've been following it for a little bit, but essentially what happened, for those who hadn't been following the story very closely, when you short sell a stock, you essentially borrow it from somebody else, sell it at today's price. So let's say X stock was trading at $30 today. I borrow it from Joe Schmo. I sell it for $30. Or the number of shares I sell for $30. Say it was 10 shares, I now have $300 in my pocket. But I still owe those 10 shares back to Joe Schmuckatelli. So at some point I have to close out that order. And the hope is when you short sell is that the price is going to go down. And so if the price then goes down to say $20 a share, you buy 10 shares for $200, you replace Joe Schmuckatelli's shares back to him, you pocketed $10 per share. That's the simple way of how a short sale works. But the geniuses over at Wall Street Bets notice that you can go online through FINRA and a couple of other places and find where stocks are where the short interest is greater than the number of shares that are out there. So I think at its highest number, there were probably 150 or 160% of shares that were being shorted. So if there's more shares being shorted than there are shares, then that leads to a problem. And that's where the Wall Street guys, or the Wall Street Bets guys, got their idea, was that if there's no one, because these guys have to close out their positions, if there's no one selling, they're hosed, and essentially put a short squeeze on all these people who had short contracts out there. So that's the layman's way of putting it. If anyone wants to talk in greater detail, I'll be happy to give me a call or shoot me an email, and we can find some time to go into greater detail. So I'm glad I had no one called and asked to buy GameStop during that time. So I try to steer clear of the problems out there in the market. So But again, I'll attach this article if you want to read it. And then, see, the next story I wanted to talk about was the Federal Reserve System crash this week. Was back online within a few hours, but from what I've read, it just was some sort of a glitch, I guess would be the technical term that I've seen out there. Just some sort of a processing error. Let's hope it's not a sign of a bigger problem on the horizon. But keep your eyes peeled, pay attention to the news. I'll also link this too. So, all right. Well, I know I've talked quite a bit about all of the dollar creation, between the Fed and the Treasury, and how the money supply is, just exploded in the last year. So what are the consequences of that? And, here's one that is going to affect, our pockets and our wallets, fairly soon, I would imagine. And it's, the price of food, grain and, the food we feed our cattle and our animals that we eat is getting more expensive. So again, if it costs more to feed the cows, it's going to cost more to grow the cows before you slaughter them and send them off to you and I to have steaks. So, these are the unintended consequences of trying to play God with the economy. And, I certainly don't want to see this get out of control. But, if I don't want to have to see black market steaks out on the dark web. So, this is an interesting read, not too long. It talks about a recent incident where we had food prices get fairly expensive, and that was back during the drought of 2012. Food prices will fluctuate, obviously, based upon supply and demand, but we've just had a really crappy year in the world. Food supplies are down. I'm listening to and reading articles that state that we're heading into a grand solar minimum, I believe is the term, so which could affect crop yields for the next few years. So if we have less food, that's going to push prices up for food for everybody else. So again, it's something I'm paying close attention to. If no one else is talking about this right now, remember, you heard it here first. Inflation is going to be a big, big problem with, again, all the dollar creation that's been going on. So let's see if there's anything. Shrinking herds, that's not going to help the price of beef. So, I guess you could buy some of Bill Gates's fake meat. I'm personally not going to jump in line for that, but feel free if you want to. So, all right. Here's another article from LouRockwell.com. These are his website is one that I frequent almost every day just to see what's going on in the world. Again, talking about the inflation that we're about to see. Essentially, this article goes into detail as far as if we push or if the Fed and the Treasury push all this money in cash out into the banking system, it's going to cause some negative consequences, which could lead to negative interest rates. Whereas, if you put $100 in your savings account at your local bank, they're going to charge you to put the money in the bank. So a year later, you might only have $98. So instead of you getting $2, in interest, and then a year later you have $102, it's going the other way. So this is one thing that, that again, we should be really, really worried about. And, it's going to have some pressure on commodities such as gold and oil. There's been negative interest rates over in Europe, from what I understand. If I've reading articles over the years, that's something that I've seen come up in discussions. Again, we certainly don't want to put ourselves in a position where we're losing money on our savings, and it really is going to hurt older folks who are primarily your savers, who are living off of their nest eggs. If you're losing money every year, just by putting it in the bank. That's a very dangerous proposition. So, will you want to keep your cash under your mattress? Have it in gold and silver. Who's to say? We're in a time of flux right now, so I'm really not sure where things are going to be headed long term. So, there was one thing here. The Fed's quantitative easing is continuing. Spending or buying up 120 billion every month. 90 billion of that is in treasuries. So the other 30 billion, I would assume, is in other securities that are out there in the market that may be distressed. Let's see here. Just the consequences of the dollar's buying power. While it's going to have an effect on us here locally in the United States, it's going to have a greater effect globally as the dollar loses value and is no longer a sought after asset. There's going to be a glut of dollars out there, and so again, this could lead to bigger problems with our economy. So, essentially, it has become a dog chasing its tail situation. We create stimulus to help save the economy, and then we keep interest rates down, and it just becomes this self-fulfilling prophecy where you have to continue to feed the beast, and eventually you're going to run out of food, and the beast is going to eat you. So let's hope that the world doesn't fall apart. But I'm not. I try to be an optimist as much as I can, especially with the world that we live in today. I try to tune out the negative from politics as much as I can, even though I do have an active interest in it. But this does give me some worry that we're printing ourselves into a situation that could take decades to dig our way out of. So, all right. As far as some best practices, things that I do on a daily basis, I go to the Mises or Mises.org. It's the website for the Mises Institute. Usually very good articles, whether or not it's like right now minimum wage. There's an article here on economic gains before COVID. I really like articles from this group simply because it's not. Granted, Mises is a libertarian organization, but you get a lot of the left-right politics out of the story, and you can get a lot more of a straight shooter as far as what the information that you're getting. So, and then the other one that I read on a daily basis, LouRockwell.com. It's kind of a collection of a lot of different people. Really good articles. Some people you might hate. Ann Coulter's one. Anyways, so that's what's been going on in the world this week. Let me bring up my charts and we can talk about what's been going on in the markets before we finish up. Drag this over here. So, all right. So the week, the Dow Jones started out at about 31.5, and we're finishing up just under 31,000. Certainly not the end of the world, but it does. If you pull back on a 1 year or even further, it is kind of starting to tip over a little bit. So we'll see based on the charts how things go. All right, let's click over to the S&P 500. Same thing. Started out at about 3,900. Finished the week down about 100 points. So again, not terrible. NASDAQ, same. We have a down week in the NASDAQ. All right, let's take a look at gold. Gold kind of peaked during the week and has kind of tapered off. My guess would be that with the markets, having a decent week, the economy, it looks like the numbers out of Wall Street have been somewhat decent. That's put a little bit of a hurt on gold. Same with silver. Let's take a look and see how Bitcoin did for the week. Bitcoin was down. It was up as high as about 55,000 a coin, and now it's finished the week at about 46,000. So So that's the markets. Like I said, it's kind of a week in the markets. It's not great, not terrible. Kind of scroll back out here to a few years and take a look here. This was our downturn last March. We had a very nice, it rallied back much faster than I thought. If you had asked me last March or April, I would have expected the downturn to continue. I would have expected that would have been the beginning of some sort of a recession in our economy. But with the amount of stimulus that was provided by the government, we avoided it. But for how long? So I mean, the same problems we had at the beginning of 2020, we still have today. We had too much debt as a nation. Interest rates were being held artificially too low. We have a government that spends north of $4 trillion a year and doesn't seem to have any, doesn't appear to be stopping anytime soon. So we'll see. I would expect, this right here that we went through last year, that was not, a recession, or at least nothing got fixed. It hasn't. Normally a recession, when you go through it like we did in the 2000s, it flushes out all the bad crap, pardon me. And, it's kind of like a cleanse for your body. If you do one of those juice cleanses and you all the stuff out of you, you feel, well, you're supposed to feel refreshed. But, sorry, I lost my train of thought there. So, with that said, we haven't fixed any of those problems, and I would expect at some point to go through that economic recession, go through an economic slowdown, and how it's going to affect the markets, it's tough to say. But we'll, like my father always says, play it by ear and hope for better days ahead. So hope everyone has a wonderful weekend. That's about all I had for now. If anyone has any questions or concerns or something they'd like me to talk about, feel free to shoot me a note, give me a call, send me an email. I'll be happy to discuss any topics that are suggested by the folks out there. And like I said again, have a fantastic weekend. Hopefully you guys in Texas have warmed back up to normal February weather. And we'll talk again on Monday. Bye.